Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. What's that noise? Oh, not you again. Yo, dude. So, dude, I read this book, chapter 8. Not gonna lie, there were some pretty big words in there. Had to use Google a few times, but I battled my way through. And I think I'm starting to get it, man. Like, buy when the market's down, sell when the market's high. This Mr. Market guy's a bit of an idiot, but he's pretty useful. Bitcoin's down massively. Bitcoin's down 40% from the all-time high. I still think I'm going to go into Bitcoin. Okay, well done reading it. I wasn't even 100% sure you could read, to be fair. So, well done there. And you're halfway there. You're interested in buying things when the market's going down, which is great. But Bitcoin, come on, man, sit down. I need to teach you a lesson. Just sit on the couch. Come on. Okay. I guess I'll take a seat. Oh, it's comfy back here. I like this couch. Hey, you don't have any snacks, do you? I watched this other guy on YouTube called Graham. He's always going on about cheap coffee and avocado toast. That'd be really, really good right now. No, I don't have any snacks. Just listen. Hey guys, Tom here from the Investing with Tom YouTube channel. Hope you enjoyed that one as well. If you did, definitely hit like and subscribe, but for now, let's get into the video. So, I recently watched a video on CNBC, just came out yesterday, with a so-called sort of cryptocurrency expert who they have on CNBC occasionally, and I've seen on there a few times now, basically pipped up against Kevin OLeary. So if you don't know who Kevin OLeary is, he is pretty famous for being on the show Shark Tank and investing as sort of a venture capitalist in those types of companies. But he's also a very rich guy, very successful business person before he got into the investing sort of landscape. And now he's basically a full-time investor and sort of business owner. He's launched some ETFs, he's done other things. And although he's quite famous for his sort of Shark Tank type approach to investing, the vast majority of his wealth is diversified pretty heavily. He's essentially almost like a dividend growth investor. Shout out to PPC Ian. He basically has rules where he never invests more than 5% of his net worth into a single stock and never more than 20% into a single sector. He only buys companies that pay a dividend, and he's very, very focused on free cash flow. So a bit of a mix of kind of value investing principles, old school value principles, and basically dividend investing principles. And that's the polar opposite to what you see in the cryptocurrency and kind of Bitcoin world. So it was interesting to see these guys pipped up against each other. And then partway through the interview, there was a crazy statement that came out, or at least I thought it was crazy, that this cryptocurrency expert has north of 50% of his net worth in Bitcoin, and Kevin OLeary exploded on him. Thought it was extremely irresponsible. I'll play that clip here shortly, but I've had a few sort of comments just asking for my opinion on Bitcoin, and I know this is a really controversial kind of topic in the finance world, so don't crucify me too much for my opinions here, but I'll play the clip and then we'll get into some of my thoughts on Bitcoin as a potential investment, as a technology, and all of those kinds of things. So here we go.
Let me become a believer, okay, because I'm a huge skeptic of this. I have my crypto crap wallet. I put $100 into it 2 months ago at a Harvard Business School class at night. It's worth $30.62, primarily because all the other crap, Ethereum, XRP, Bitcoin Cash, Litecoin, Stellar Luminous, blah, 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 blah. What happened to all that stuff? If this is really such a great idea, why is there only one Vegas game working?
Yeah. Well, look, I'll save you a lot of headache, right? I'm here to talk about Bitcoin. Bitcoin's the most important, and that's the only one that you should focus on.
How much of your own dough is in it?
Yeah, over 50% of my net worth's in Bitcoin, and I don't plan to sell it.
I forbid that. That's insane.
You forbid that.
That breaches everything about diversification and investing. That's crazy.
How much of your net worth's in the stock market?
In any one stock, never more than 5%. In any one sector, never more than 20%. I teach this stuff. You never go beyond concentrations of that nature. 50%? Shame on you. That's nuts.
So the first thing I think we have to do with Bitcoin is really separate Bitcoin itself from the underlying blockchain technology. That is a lot of sort of the rationale behind investing in Bitcoin is sort of almost a bet on the technology and a bet on this sort of finite resource of Bitcoin. And I don't think anyone is going to disagree that blockchain technology has the potential to change industries radically, to add some very cool stuff to even older industries. You know, I work in agriculture and food production in my sort of everyday life, and there's some pretty awesome stuff, you know, coming out of blockchain through sort of supply chain management. You know, there's apps now where someone in China or in the UK can literally scan their packet of meat that they bought from the shop, and they have a profile of the farmer that grew that animal pop up on their phone, and that is pretty damn cool in my book. So there's lots of technology, you know, that's barely scratching the surface with the different applications for this stuff. So very cool technology. I don't think anyone's doubting that. But as far as Bitcoin and as an investment, that is where I start to become a lot more skeptical. So I want to run through a couple of the common sort of arguments on both sides of the equation, I guess, and let you know where I sit. So one of the things that's come up quite recently, or over the last couple of years, I suppose, is that, you know, it's irresponsible almost not to invest in Bitcoin at this point. And they bring up this idea that Bitcoin has been the best performing asset over the last decade. You know, it's outperformed the stock market, it's outperformed real estate, it's outperformed all of these other investments. And I don't know that that's quite the best argument. I can see where they're coming from, but you can say the same thing about a bunch of other stuff. You know, you can say the exact same thing about Amazon. If you were to buy Amazon stock in the late 90s, you would probably be a billionaire at this point if you had a reasonable amount of money in Amazon and kept buying it over time. So the thing is, although that's true, no one knew what Amazon was, and no one could have predicted the success of Amazon that early. I don't think even Jeff and Mackenzie Bezos thought it was going to be as successful as it became. So there aren't a whole bunch of Amazon millionaires, multimillionaires and billionaires running around because they knew about this technology early on, or they knew about this company early on, and they've ridden that, you know, wave basically the last 20 years. They've just kept holding that business. Those people aren't really out there. You don't hear of them. The only super rich people that I know of that have invested in Amazon, and that's been the primary source of their wealth, have been Jeff and Mackenzie Bezos, and that's absolutely it. So I think a lot of those same things can be said in the Bitcoin world. Certainly there's people that have become millionaires out of Bitcoin. I'm not denying that. There's certainly been some millionaires destroyed out of Bitcoin as well, but I just don't think that's quite the best argument to be pro-Bitcoin. Sure, it's performed well, but nobody knew about it, so you know, what does it really matter? So that's the first point. Let's get into some other things as well. So one of the other interesting points that came up, that the sort of cryptocurrency expert said, was it would be irresponsible not to invest in Bitcoin at this point, and that is definitely a point of contention, particularly across the value investing world. So if you've ever heard Warren Buffett or Charlie Munger, or basically most value investors talk about Bitcoin, they have various arguments, which we'll get into in a sec, that basically mean they can't value the asset, or they don't know, you know, it doesn't produce anything, all those sorts of arguments, which we'll get into shortly. But there is one value investor that I was quite surprised to hear is actually invested in Bitcoin, and I heard this on the Investors podcast. I think that's what it's called, the We Study Billionaires, the Investors podcast with Preston Pish and Stig Broiderson. If you don't listen to that podcast, it's a really good one for the value style investors. And I was really surprised to hear that Bill Miller is actually an investor in Bitcoin. He has about 1% of the portfolio in Bitcoin, and it's basically a bet on technology is the way he described it. So most of Bill's investments, they're looking at, you know, what's the future cash flow of a business, what sort of return do we want to make, the standard value investing principles that we talk about all the time on the channel, and then here he is sitting with 1% in Bitcoin. So he's someone that has actually gone down that track. It's one of those super high risk, super high return type strategies that he's just got sitting at as a tiny little 1% position. And my advice, again, not financial advice, but if I was to personally invest in Bitcoin, which I'm not currently, that would be the type of approach I'd take. I certainly wouldn't be putting north of 50% of my net worth into Bitcoin like this guy on CNBC has done. So that's the first thing. I think next I want to get into why I personally am not invested, and some of the comparisons that people make with Bitcoin versus sort of gold. Commonly, those two things are described almost as equal, and I want to almost, I guess, have a crack at debunking that a little bit. So, the first reason I don't invest in Bitcoin is it's a non-productive asset. So when you have an asset that's non-productive, it means it doesn't return cash to you. So when you invest in a business, which is exactly what you're doing when you invest into the stock market or invest in shares in a business, basically you are paying for a money printing machine, right? They say that money doesn't grow on trees, but there's these things out there called businesses that produce a ton of free cash every year, and will continue to do so for a long time in the future. And that's about as close as we can get to having money that grows on trees. So we can buy into these businesses that produce all this cash all the time. They can either invest it back into their business, they can buy back shares, or they can return it to us in the form of a dividend. So that is why most of the time a productive asset will always outperform a non-productive asset over the long term. There may be periods of time where gold does very, very well versus the stock market and outperforms massively, but if you look over an extended period of time, holding gold is going to underperform things like real estate, things like stocks, things like farmland, things like, forestry investments, things like, horticulture, avocado orchards and things like that. Anything that produces a good that people want and that you can sell, or simply produces cash in the form of a business, that is something that will perform very well over time, and it's something that we can very rationally put a dollar value on it. If you're going to get X dollars of cash out of this business over the next period of time, you can work backwards and put a value on that business, and that's something that's much trickier to do with non-productive assets. So it's very, very hard for me to value a piece of gold, a piece of silver, that water bottle over in the corner there. These are things that don't produce cash, so you can't sort of really work backwards in a discounted cash flow type style to figure out what that is worth. So that's the first thing. Just because it doesn't produce cash or it's non-productive does not necessarily mean it has no intrinsic value. Obviously, gold has a value. Obviously, silver has a value. But those things have a value because they have a genuine, real use in the world. There are people who are willing to buy gold as a product because they want a nice watch, or they want earrings, or they want, gold-plated door handles, or whatever it is. There is a genuine, real demand for gold because people like gold. People enjoy having that around them, and they're willing to pay a lot of money for that gold. The same thing goes for silver. Same thing goes for all the precious metals, the whole bunch of commodities, whether we're talking about milk or meat or whatever that commodity is, including gold. There is a genuine demand for that product for a practical sort of real life use. And when people start comparing Bitcoin to gold, I think that's where that argument falls over. There was really no practical use for Bitcoin. Sure, there are a very finite kind of small number of places where you can literally use it as a currency, but that is not what most people are doing with Bitcoin at this stage. They're simply using it as a speculation to try and ride up waves, to try and get rich quick, all this kind of stuff, and it really doesn't line up with the gold argument. People are calling it the 21st century gold. You don't have to worry about having gold stored in a unit anywhere that's going to get stolen or anything like that. You can simply invest in Bitcoin, have it stored through this blockchain technology, and you're good to go. Unfortunately, I don't 100% agree with that, just because, you can't make a Bitcoin into a gold watch like you can with gold, and you can't do all these different things that you can do with other commodities. So that's about the extent of it, to be honest. If I can't put a value in it, if I don't know what it's going to be worth in the future because it doesn't produce cash, I'm probably not going to invest in it. Again, doesn't mean it has no intrinsic value. Gold has an intrinsic value, silver has an intrinsic value, but that kind of stuff is driven by supply and demand, by real world products. Unfortunately, Bitcoin doesn't fall into that category, so for me, it's something I'm going to have to step away from. Possibly it's one of those things that I'll look back on in 10 or 20 years and you know, Bitcoin will be at $1 million a Bitcoin or something. Who knows? It could be at zero. It could be, you know, still at similar levels. I literally have no idea. And regardless of how much sort of expertise you have in cryptocurrencies and Bitcoin, I would struggle to believe you if you told me you could value this instrument, you could value these coins. So that's about as complicated as it gets. Relatively simple. You know, I just can't put a dollar figure on it. I don't know what it's worth. The technology is awesome. It's going to do some very, very cool things in the world, but it's not a place where I'm going to be putting my hard-earned money. So I hope you enjoyed the video. I hope you enjoyed the little skit at the front, at the start of the video as well. If you did, definitely hit like and let me know, and I will see you in the next one. Cheers.